Hello everybody, welcome to your weekend edition. It is Merlin Rothfeld here for the Trader Merlin Show. Hope you had a great trading week out there. And the month of July has come to a close, and it's the fourth straight month of just awesomeness out there. So cheers to everyone. I decided to go with the light beer today. I'm going with the Kona Longboard. Just wasn't feeling whiskey today. So cheers everybody. Hope you enjoyed your trading week. All right, I have so many listener questions. I actually was going to have a guest on the program today, and I thought, you know what, I have so many questions to get through. I don't know if I'll be able to get through them all. I'm going to do my best. So shout out to everybody who's joining us today. I see Gayer, Kev, Steve as well. Thanks for the nice words, gentlemen. I got some nice emails from you guys. Vernon as well. Nat, good to have you with us. You've been absent, you've been missing. You've been taking some classes, have you? Patrick as well. Jorge, Ellen, good to have you guys all with us. Brian as well, good. I'm going to start things right off with your overall market rundown. I'll do just a quick little breakdown of the markets, then we'll go into the listener questions here, because today there was a lot of very interesting things that happened with regards to levels, and your questions kind of draw me right to that conversation. So I'm going to start off with this one, which is really just a very quick little breakdown of the indexes and what happened out there with the overall markets from an index perspective. Russell 2000, surprisingly, was the worst performer out there. Almost everything else was nice and green today, but the Russell 2000 just could not rear its ugly head. It finished the day down 0.98%, but actually was, if you look at the Russell, it moved up a little bit in the after-hour session. The numbers you see on my screen here are the after-hour session, so it's up just a little bit in our after-hour session in negative 0.74, but still down on the day. Well, from there, I guess we could go up to the 10-year. That you see the TY on your screen was showing a gain of 0.1%. The only reason I find this noteworthy is that the 10-year bond today is at 0.536%. The reason that's important is obviously, the housing numbers started to show a little bit of slowdown. Not tremendous, but they were certainly starting to slow down a little bit. And if this continues to drop, which I do believe it will, then we'll be back at that 50 basis point mark on the 10-year treasury yield, and that is obviously a great sign for the real estate market. So it's been struggling to get to those historic lows we saw back in, I guess I got to go even further back than that. We may actually be at those historic lows right now on that 10-year. So that was your, I guess that's number 6. S&P 500, here is your ES on the day. It looks really damn good, I gotta say. It looks really good, looks strong. We finished the week on a high note. It was really just chopping back and forth for quite a while, and then all of a sudden it rallied on Friday's session. So it was good to see the S&P rally to highs. Didn't help me. Of course, I'm almost out of my entire position on those SPY puts, which is just a gigantic loss for me, but that's all right. We'll get it back in one way or another over time. As you see here, we do have what's called a hanging man formation. It's right at these all-time highs here. Well, I'm going to say all-time highs. It's right at these most recent highs that we achieved last week. So great finish to it. S&P 500 on the day, as you can see with the futures perspective, was up 0.64%. It was actually up a little bit more than that. When you look at the actual indexes, was 0.77%, finishing at 3271. Futures market is just a little bit shy of that number. All right, I'm going to keep moving up. NASDAQ 100, which we all expected to have just a monster day today, given what happened with Facebook and Amazon and what was the other one? Apple, which is a great listener question for today on Apple. Let's go to that NQ. You see it, same thing. You get that hanging man formation because it's at the top of a small uptrend, right in area of supply. Would not be surprising to see this actually have a bit of a pullback here because it's smacking its head against 11,000. We'll talk about that more as we progress. NASDAQ finishing at 10,745. Not too shabby. All right, moving up, gold, continuing its streak. Beautiful looking chart of gold. Broke above 2,000 today. I think, Brendan, you were in here the other day saying, looks like it's going to break 2,000. Agreed. I actually thought we'd see some pullback, which is why I sold out of my stuff on Wednesday, sold out of my gold. We can always look back in hindsight and wish I would have held it longer, but I'm very happy with my gain. So gold on the day, rallying up to 1994 is where it closed at. Pretty damn good day for gold, if I don't say so myself. Keep moving up. Crude oil. Crude oil was interesting because it came just ripping back down. Gold going to 5,000. Yeah, I don't know about that. Definitely going to, at some point, probably reach that number. But crude oil, up 1.28%. What's noteworthy is yesterday's sell-off. You see that tail just tipped right down into that low that we saw back on the, give me the date here, Merlin, the 10th of July. Hit it and just ripped right back out of it. I know there were some of you who were thinking that if we got below some levels are a little bit higher up, that we're going to see a much bigger retracement. And, it's why you want to look for major turning points. And where stocks have had issues, or futures have had issues at price levels, and that's what we saw yesterday. Bounced off it. Now you're just right back in that sideways action. The boredom continues for crude oil. The boredom is not there for Bitcoin. Bitcoin looking just like gold, maybe even have a bigger percentage rally than gold. Today it was up 2.2% to 11,620. So Bitcoin all of a sudden starting to get back in vogue, which is great because I think I have 8 point something Bitcoin. So pretty happy about that on the Bitcoin front. And that, my friends, is your top 7 markets out there. So I will monitor the chat here as we go through. So please feel free to keep on, sending in your comments and questions. Peter Schiff, he's one of the more outspoken, oftentimes he'll say outlandish with some of his forecasts and predictions. Of course, he will be right at some point in time. Gold will hit 5,000 at some point. It's just like saying the Dow is going to hit 50,000. It will at some point, not in the next week or two, but down the road, it will, because markets are built to go up. It's just a matter of just the architecture of them all. Yes, certainly 3,000 is a much more plausible target on the on gold. Actually, both of these, I guess you could say gold 3,000 target is certainly doable, and S&P 3,000 is certainly doable. All right, let me go to listener questions here and start things off. I tried to find a nice picture today to do our weekend cheers. Well, I chose Capitol Hill today just because of what's been going on this week. For those of you who have been following this program, you know that the testimony on behalf of Google and Apple and Facebook and Amazon was been going on Wednesday, and I don't think you're out of the woods yet. There may be some fallout, some regulatory changes, and again, if anything happens to one of those 4 big companies, this market's going to come down in a big way. If you go back, and these are just some crazy stat figures for you, if you go back to January 1st of 2013 and you look at the S&P return over that period of time, up until like a week ago, it was 110% gain. So from 2013 to 2020, 110%. Great if you're a long-term investor, right? That's what you're looking for. I look buzzing that? Nah, I wasn't buzzing that picture. If you just took out the FANG M stocks, which of course is Facebook, Amazon, Apple, Microsoft, and Netflix, and Google. If you just took those, was that 6 companies? Facebook, Apple, Amazon, Netflix, Google, and Microsoft. So 6 companies. You take those 6 out and you leave the other 495 alone. Those 6 companies alone have moved up in that same period of time that the S&P moved up 110%. It moved up 503%. And it's crazy. I can actually probably bring up a chart for you guys to show you the extension and how much it's stretched out. If you look at the S&P 500 and you actually take out those 6 companies, the markets have only gone up 70%. That's a 40 percentage point difference in return because of 6 companies. That is just absolutely crazy. Now, those companies right now are on Capitol Hill, right? They're testifying. So again, if anything happens to any one of those, it could be a major shock to the system and what could bring this, I'm not going to say house of cards. Certainly some people feel it's very bullish. I'm on the bearish side of things just because the fundamentals don't make much sense. But when the Fed's pushing, it's going to keep going higher. So that's the picture background today. It was a pretty, I might have to re-update this picture now that I shaved my beard off. All right, let me start with your first listener question of the day. And again, if you guys have some, feel free to send those on in. I always love listener questions. We'll start with one from Harrison. Harrison says, can you clarify how the price action of index futures work? For example, we know that ES tracks the value of the S&P 500. So does the ES contract. It not necessarily that it tracks the value. Okay, that's a little bit of a misconception. I'll explain in just a second. S&P contract value moves because of the net change in the S&P components or because buying and selling the contract itself. I can't find any straightforward info on this. Okay, so if you break it down to what a futures contract is, yes, it's not necessarily tracking the index. Okay, I think we have to forget the word tracking. It's not tracking. If we look at the futures products, okay, any futures product, you're going to have a forward-looking expectation about what price will be at a certain point, right? So if you look at the, we'll use the S&P 500 as an example. The S&P 500, we are currently trading the September contract, so it would be ESU 20. That means that people right now, if they're trading that futures product, they're anticipating what the price of the index will be on September the third week of September when that futures contract expires. So it's not tracking necessarily, it's the expectation or anticipation of where it may go. And the further out we go, the more leeway, the more flexibility or unknown is out there. These are futures products that, again, they are giving an estimate as to what the forecast is for that price in the future. They're not necessarily like locked to it. Of course, if prices get so extended and away from what the market price is, traders will go out there and arbitrage it back, and it puts it back to a more reasonable level. So, your question is, it's not tracking. It's not tracking. It's an anticipation of what those prices of that index will be at a certain point in time. And you can see big swings, right? You could see that maybe the September contract of the S&P futures is much higher than the SPX right now, because the SPX is actually a index. It's simply tracking the price of those securities right now. That's all it is. S&P futures is a derivative that's saying, look, we'll create an instrument that allows you to give an estimate as to where you think price will be in September. And that's all it is. So you tend to get these big differences in the price of futures contracts from month to month, as well as the index. So I think your question is saying, does the S&P 500 move because of the index itself? Yes, right? So if, let's say, the SPX, which is your S&P 500, moves up 1%, well, the futures contracts are most likely going to move 1%. It'd be really rare to see the September contract not move at all and the S&P today rally 1%, right? Because the expectations are going to adjust with what the current price is. If you're forecasting anything, you want to know where is price right now, and of course, the index itself is changing day to day. So the forecasts are going to fluctuate with that, if that makes sense. I'm hoping that makes sense to you guys. So the further out we go, the more off those numbers will be. I mean, there was a good example here. I think Patrick was talking about it a second ago, which talked about oil inventories, the number of oil barrels. And they can't even get within 5 million barrels of oil price with regards to expectations of inventory. So these guys are just speculating about where the price of oil is going to be. In this case, you're looking at where the price of the S&P 500 is going to be. Again, if we have a market that is really, let's say we look at the December contract, which would be ESZ20. If that gets really out of line, there will be a bunch of trading done to push that back down to more normal levels, or a level that is more feasible for the market to get to. But again, that ESZ contract is pure speculation. It's saying, what does the population think the price of the S&P 500 will be that third week of September or December or March or whatever contract it is that they're trading. So there you go for that one. Yeah. So Harrison, hopefully that helped out. Again, it's not tied to the actual index. It's an expectation of what the index will be at a certain point in time. Okay, question numero dos. We're going to go, this one actually came up a bunch. Oh boy, after we did the show with Sam Evans and Dan, there was a lot of questions about CDS, which is credit default swaps. Dunkster says, how do you look at the CDS spread of a company? There was another one that came through from Baldhead Bees. He says, Merlin, can you show us next time on the show how to look at CDS spreads that Dan talked about, looking at the debt spread to predict where an equity will go? That was a very interesting way as a leading indicator. First off, it's not one of those readily available pieces. To get that information, you probably have to have a Bloomberg terminal, and those are not cheap. Right? Last time I checked, they were like $1,500 a month. It's expensive, so that is a data set that you're going to have to pay a lot of money for. It's not something that's readily available. I personally do not look at it. I know what it is, but I don't look at that because I'm just way too cheap to pay for those data feeds. That said, there are some sites out there that you can go and get some information. You can probably, dig through Google and say, where can I find credit default swap information for different companies? A majority of them. I'd be surprised if there's free stuff out there. This is kind of that, privileged information that they're going to charge for because they know they're going to make money on it. It's not. I don't think it's the goose that lays the golden egg by any means, but certainly it's one of those, call them an odds enhancer or something that could help assist putting you on the right side of a trade, or at least a clearer picture as to what the institutional perspective is about a specific company. So sorry guys, I don't have a Bloomberg terminal here. I am not going to be showing credit default swap stuff because I don't trade it and I don't have access to that information. So just wanted to point you in the right direction. You'd probably have to get a Bloomberg terminal. Next time I have them on, I'll see what would Dan have. Would Value Line have it? I don't know. You could check with them. Go if you have a subscription to Value Line, go through there and check it out and see what they offer. But my guess is probably not. It's a real specialized data source, a data feed. All right, this goes back to the futures as well. And again, keep your questions coming, guys. I'll do my best to get to them all. Michelle, you actually sent this to a different email address. I don't know how you got the email address you sent this one to, but nonetheless, I got it. It says, why are prices so different when I look at NGU20 versus NGZ20? And this is exactly what we just talked about. Okay, I'll bring up the chart here, and let's see if I get those contracts. I don't usually trade natural gas, so I will go to NGU20. Okay, so right now you're looking at the NGU20, which is the September futures contract, is trading at $1.81, 1.816. Okay, you can see that last price there on this daily chart. Sold off a little bit. Still looking good to me, actually. We talked about this being kind of a double top formation, but it is building strength on it. So a break above these highs right around, call it just a hair shy of $2. I like going long on natural gas. But this is the NGU. If we bring up the December NGZ20, you're looking at a price of $2.70 or 2.798. Now, why would that be? First off, I told you it's anticipation of where the price of those futures products will be, or the underlier will be at that moment in time. And of course, if you look at the September contract, you're just ending summer. Not a lot of natural gas consumption. Of course, as we get into the winter months, talking your October, November, December, January, February, March, the price of natural gas is probably going to accelerate because of demand. And of course, every year we hear about the super winter coming and the apocalypse and the snow, all that type of stuff. So obviously, when you look at December, the prices are going to be a little bit higher. So that's why you're seeing such a discrepancy here, is because the traders are anticipating that demand will be higher and the price of that commodity will be higher. As Big Eb just points out, seasonality as well. And natural gas is certainly one of those that is impacted significantly by seasonality. When you look at certain commodities like corn, wheat, and soybeans, natural gas certainly heavily impacted by seasonality. Would you look at gold and say it's as impacted? I know there's the Indian wedding seasons and things like that, but it's probably not as influenced as some of the commodities that are coming out of the ground, etc. So yes, that's why you see such a big discrepancy on it. The future symbols, just so you know, if for those of you who might not know futures at all, it depends on which contract you are trading. Some are quarterly, some are monthly, some have a really odd futures pricing model. So I put all the months right here just so everybody could kind of see them and know. I highlighted in red, these are the majors. So for most of the index futures, you have the March, June, September, and December contracts. Right now we are trading the S&P 500 September contract. That will change as we get a little bit deeper into September. Right around mid-September, you'll see that roll over, and then all of a sudden everyone will start trading the ESZ futures contract, ESZ 20 for December. So there you go. What was the lady's name? It was Michelle. There you go. There's your question on natural gas and why it's so different. And you will see on a lot of these different futures products extreme differences. So natural gas is a big one. I mean, obviously that's a huge difference going from $1.80 to $1.80 to $2.80. That's a huge increase, right? Yep. Well, you can't buy. Wouldn't it be great if you could buy the September contract and just convert it into the December? You can't do that because you're like, I'd make $1 if I just switched that into it. No, you wouldn't be able to do that, unfortunately. Gerald says, what hours are the futures? What are the hours of the futures from one day to the other? When did it start? All different. It's all different. The best source for you on this one, and I highly encourage if you are interested, you can go to the CME group, and I will just and look at whichever one you want, right? So if you go to CME group, they got a ton of great information. Take me just a second to get that one up here. Don Fran, good to have you with us. If you go here to data, and let's say you wanted to know about, let's say you want to know about corn, right? So here's your corn. Click on the corn. You can go into, right here it says trading hours. And so it'll tell you for each one specific trading hours. You'll notice that they can be very different from instrument to instrument, like extremely different trading hours. Some are just a couple hours a day. When you get these really limited instruments, it probably will just go all digital eventually. Now, So yeah, again, Harold, you gotta, or was it Harold? Gerald, you gotta just find the instrument you want and it'll tell you because they're all different. All right, what else I got there? Merlin, I've often run off the subject. What is the picture of your right shoulder? My right shoulder. I think. Well, let me just show you. Are you asking? Is it this one that you want to know about? So basically, I lived in Milan for a long time. I lived there for almost 7 years, and Milan is one of the. While it's a great city, it's filthy. It's one of the most vandalized cities I've ever seen in my life. Someone was talking about Berlin being very graffiti orientated. I like art graffiti, murals and things like that. I hate when someone just tags their name. I want to punch them in the face. But anyway, this one over here, these are all Italian street graffiti art. This is actually a really famous guy. He just drew these kind of really quick characters. That one's cool. This one I thought was kind of appropriate for the times right now. It's just a protest, right? They've all got their guns in their hands and they've got their hands in the air, and I feel like it was very timely to put that one up on the wall. I'll probably swap out the artwork here. I'm going to try to do it more frequently. I thought of actually painting a big mural in the background here so it looks a little bit different, but yeah, that's the significance of the pictures out there. So thank you for asking, Leighton. David says, when looking at price action zones, does ES give you a better picture than SPX? I think that's a personal question. For me, yes. I actually like to look at the S&P futures levels because to me that's where the big money's at. When you look at a lot of big futures contracts are being traded, I would look at the S&P 500. So you'll notice when I'm trading, I don't even look at the SPX. I'm always, this is my setup right here, but I'll always have on the top, I have the futures products. So I'll have a watch list that's very short, just like you guys see here. And normally, because I'm only on one screen right now with this one. Normally I use a 3-screen setup, so it's just a little bit different for the show. But I have a quick watch list like this where you see the futures contracts, and I'm using continuous contracts, not the current contracts, so I use continuous. And if on the top is all these different futures products, and I generally only have 4 things there. I'm going to have the NQ, the ES, the Russell, crude oil, and I think that's it. I think I got like 5 things. If I click at all the charts on the top change, and then down below I have a watch list that looks like this, where it's linked up to all the bottom charts. So I basically have 8 charts going at one time, starting at the daily, the 4-hour, the hourly, and the 15-minute. And then basically what I'm looking for is correlation. So if I have the daily chart of the S&P, right underneath that is the daily chart of whatever equity it is I'm looking at. So I'm looking for the correlation between my underlying equity and the overall market. SPX measures volatility. No, SPX is just simply the index itself. So if you were to take a piece of paper and write down all the values of every one of the S&P 500 components and then run it through their formula, that's SPX. It's simply a number that tracks the value of all of it. If you want to measure volatility, that's VIX. The VIX measures volatility, VIX. Chart what you can trade. Can only trade SPX options if you... Yeah, there you go. That's a good way to look at it. I mean, I think they're all powerful. I mean, there are not going to be huge differences on SPX and a current futures contract, right? It won't be. I don't even think I get it. SPX. Do I get? Yeah, I don't even get that data feed. So what's what we get? $SPX.X. Okay, so I do get it. Here is just to show you. We closed on that SPX today, right now, trading at 32.71. Well, S&P 500 finishing at 32.69. So you're 3 points off. Basically, what that's anticipating is that by the end of September, they're anticipating that the market will be 3 points lower than where it is right now. That's pretty much 2 points lower than where it is right now. There you go. There you go. Perfect. Okay, back to listener questions because I do have some. That was the question from Michelle on the NQ. Let's look at the next one from Jeff. And this is a long one. So Jeff, thank you for the question. He says, can you discuss the price action of Amazon? They blow out earnings price from yesterday. It gaps up almost $200. It sells off all day, 80 or 90 bucks. They're still a great spot, but I would have thought all the minions would have pushed it up, even though it gapped right into supply zone. The minions did nothing for the stock today. What's your take? Well, I mean, I guess you got to first take a look at Amazon and see where it's come from. And this is the important part about all this, is saying, where did these things come from? If I go to AMZN and look at its move, since the bottom here, you got to look at this picture and go, one of these kids is not like the other, right? It has moved more in it moved more in 1 month than it did the entire year of 2019, if that puts it in perspective. Now, as far as percentage range goes, I'll give you a percentage. If you go from the dead low of 2019, the dead low, which is right back here, I'll make sure this is on snap mode, just to give you a perspective why I think it's completely just blown out of proportion. You go from the dead low to the dead high. Not saying what did it do for the year, but the dead low to the dead high, it was a 29% swing, okay? If you do that same thing now and go from the dead low to the dead high and talk about how much this thing, how percentage-wise, how much it swung, okay, we're a little bit off those highs right now. You're looking at 105% in 119 days. Jeff Bezos' wealth just doubled in 119 days. It is so overweighted. Now, I know, let me just take a step back here. I'm not saying Amazon is bad. Of any of the companies out there that I would be like thinking long-term put my money in for the long haul, it is 100% Amazon. Screw Apple, screw Google, ads and search, that's great. These guys are selling everything. Everything under the sun you can get at Amazon. And it's going to get better and better and better if you're an online shopper like myself. So I don't see it as any surprise that Amazon has been doing so well. And I would actually consider it moving even further to the upside, right? This could be probably the biggest company in the history of the world at some point. I read something. They had something like almost 1 million employees. Is that right? So, I mean, that's a huge number of employees. Getting right near 1 million employees. It's the largest employment firm in the world is Amazon. Crazy. So, let's go back to the original question, which wasn't, hey, Merlin, what are your thoughts and what do you think about the macro fundamentals on Amazon? If you look at the earnings, do you think that this move right here may have priced some of that expectation in? I mean, they had blowout earnings. They were supposed to make, I think it was like $1.80 a share, and they came out at over $10. It was a monster beat on earnings, but it was to be expected and it was priced in. The question is, will that be sustainable? I think the longer that COVID goes on and the longer retailers are shut down, the more Amazon benefits. As soon as we get out from underneath this COVID thing, you'll probably see Amazon drop a little bit. So, Jeff, this is one of those classic examples of buy the rumor, sell the news. The news was, holy shnikes, they blew out earnings. A monster beat. Well, that might be time to sell. I mean, it's actually usually one of my tactics is if I can find something that I feel has been overextended and it gaps up into an area of supply, then I'm looking to go short on that security. You got to be careful because you're going counter trend, right? So, oh, did they? I didn't see that one, Mark. They're about to launch 3,000 satellites. I mean, pretty much the guy can just buy the world. Bezos is just ridiculous. It's how much money he's got. But that's my take on it, Jeff. I think this is a buy the rumor, sell the news. So that's as soon as they come out with earnings, it was at some supply levels. Perfect time to go short on this bad boy. Okay, what else? Great one. This is a question that has been burning in people's minds, and that is Apple. I've gotten about 6 messages over the last couple of days asking about buying Apple. Big Eb says, careful shorting Amazon. Absolutely. I wouldn't. I mean, it looks so overbought, but I'm not shorting it. No, I would never short Amazon. It's funny because I told you guys yesterday's show with Corey Lane that I'll never trade Apple again simply because of what happened to me in the late 90s trading it, and I just couldn't get a grip on it. Fine. Cornerstone of my trade plan and discipline, don't trade Apple again. I may actually put in one there that says don't ever short Amazon, just because I think the odds are against me. All right, so the question is, with Apple's earnings, hey, Don, it's never a bad time to say you're long. You have reasons why you are long. No one's going to poo-poo you for going long on Amazon. I mean, especially if you've been long for a while. Bravo, congratulations. It's just, I think, and we'll probably talk about this next week because Don's going to be on the show. Don, I thought I had you for Tuesday. I'm going to see if you can. Monday would be better for me if you want to come on Monday. It's all about looking at these price charts and saying, are they a little bit overextended? And this question that came through from Clark here is exactly that. It says, with Apple's earnings forecast and split announcement, I'm looking to buy Apple. What do you think? This is my problem because you look at a chart right here and you look at the price of Apple, what it has done. Okay? Huge move up today. I think a lot of this has to do with the split announcement. Certainly their earnings were very nice, right? At least with regards to expectations. Now, let me go back one slide here. I want to show you this. Before I go into the analysis of what I think you should do with Apple, I want to show you their earnings. This is their annual earnings. And it's a combination of two things. Number one, you've got their revenue in green, which, of course, you always want to see both of these colors going up. You can see 2016, 17, 18, and 19 at the bottom. Revenue has been going up. It dipped a little bit in 2019. Earnings also dipped. So 2019 wasn't the best year, but it was still a great year, right? It was a great year. Now, this does not include 2020. So remember this picture, guys. Look at especially with 2019. And then let me show you the quarterly. Notice just in Q4 of 2019, they made over $90 billion and they had in revenue, and their earnings was over $20 billion. Well, all of a sudden Q1 put them to just a screeching halt, right? You had less than $60 billion in revenue, so that right there is a 30% drop in revenue. And their earnings, I mean, I can't tell you exactly what that number is. It looks to me like probably 2 or 3 billion. So they went from 22 or 23 billion down to 3 billion. And they're barely making money. They're barely making earnings. I say making money. They have tons of revenue. These two are significantly impacted. So if you look at the picture here from the left-hand side, you expect price to be moving up. All of a sudden, we have Q1 and Q2 earnings abysmal. It doesn't look, I know, I say abysmal. I'm using it relative to what they have been doing almost every single month. So it doesn't look good for Apple. Oh, but let's look at the price chart. I need angels singing in the background right now. Right? Hallelujah, hallelujah. I mean, come on. What the hell do you do with Apple here? You're thinking, I have to be going long here. My gut tells me, and I can't trade Apple, so you guys are going to have to do it vicariously for me. Apple, to me, is way outside of its current valuations. I think it's way overextended. You have something that's just gone almost parabolic with Amazon, right? Did their business model really change that much? I don't think anything drastically changed that would warrant it going from $220 to $425 in a period of less than 6 months. It's overextended. Its earnings are dropping, right? They also have supply chain issues with China, et cetera, et cetera, et cetera, delaying rollouts of different products. I agree with Big Eb here. It says, wait on Apple. If anything, I'm really waiting for that opportunity to short. It would be interesting to go a little bit, maybe some deep out of the money put options on this one. Just because if the revenues keep dropping like that and earnings are down also, it can't support a price that keeps on moving up. What's happening in my opinion is the fundamentals of Apple have not looked good for the past 2 quarters. They're looking rather weak. But just because money is pouring into the U.S. equity markets because we've got a cheap dollar, which we'll talk about here in a second. You've got a real cheap dollar, so foreign investors can buy more of our products and services. They're looking for a place to park their money, and of course, the U.S. equity markets were on a rally. So I think you have a lot of, we'll just say, external pushing this to the upside. I think it's ready for a correction. 425, mark my calendar. I think you're definitely due for a correction on this. And I would not be buying Apple. That was the original question going back to Clark, was buy Apple. No, I don't think you buy it. I think a large part of the move up in the past couple days has been because of the split. Okay? The split is a big factor. People love to buy splits because, I own 1 share, I now own 4. Yeah, that is true. But remember, those shares will be at 1/4 of the cost on the day of the exercise date of the split. Yeah, Tom. Okay, so Tom brings up a good point. And again, I think right now what's happening is a lot of companies are changing their thing. Let's not talk about Kodak, which is just ridiculous. Yes, Richard. I believe it's August 24th or 25th is the day of the split. Tom says, Apple's upside is in medical devices, data from wearables feeding into the medical world, and the apps that can come from it. Yes, certainly that is a great opportunity, and it's a great area. But do you look at the revenues? The revenues are a fraction of what they were. That, to me, is a bad sign if I'm thinking about buying a company. We could bring on fundamental analysts if you want, but if you see a company that all of a sudden has this kind of kick in the gut, that means that their share price should be tanking too, and it's not. It's actually going the exact opposite direction. It's going straight up. All right, Patrick says, if it's not too complicated, can you explain a split? Sure. The way a split works is a company's board of directors will make a decision whether they want to switch their, split their shares. And of course, there's a regular split, which is every 1 share now becomes 4 shares. Or they dictate, however. You can have a 1-to-1 split, a 1-to-2, 1-to-10, 1-to-20. It's up to the firm to dictate what the split is. With Apple, it's going to be 4-to-1, meaning for every 1 share you had, you will now be receiving 4. So let's say you had, on the day of the split, which is August 24th or 5th, you owned the shares long, right? You took it home overnight, and that's basically all you have to do. If you take them home that night, the next morning is when it rolls over. That's when you get your split. So you went home with 100 shares of Apple, and it was $100, right? It was $100 a share, and you had 100. The next morning, what's the share price of Apple going to be, right? Remember, the night before was 100. The next day, it did a 4-for-1 split. What is the share price of Apple going to be that next day? Let me grab a sip of my beer to clear my throat. Well, if you have a 4-to-1 split and it's $100, it's pretty simple, right? It's simply going to drop in by 25 or 1/4. So each share will now be worth $25, which will freak the hell out of you when you are long that stock and you don't know that they have a split. I've had some companies I didn't really pay attention to, and they split, and I forgot about it, and I was like, oh my God, I spent $20 a share on this thing, and it's now $1. What? It's because of the split. So what happens is, yes, your shares will now be worth $25, but instead of having 100 shares, you now have 400 shares. So the value is still the same. If that makes any sense. There you go. I will go to I will definitely check me out. Exactly. That's a great analogy, Don. He says if you take a pizza and split it up, you still have the same pizza. Correct. And what this does, it's a beautiful thing about human psychology. If I was to take I'll give you an example. Do I have anything around here I can use? All right. You know what? These are the same book. Perfect. I got 2 copies of Reminiscences of a Stock Operator right here, right? One is got just a plastic sleeve over, but they're the same book. And let's say you walk by a store and this book over here, the red one, does it have a price on it? I'm going to say $20. It's in the window. It says $20. You go to the store right next to it, and there's a huge sign in the window that says all books 50% off. And you're thinking, well, heck yeah, I'm going to just go into that store and buy the same book at 50% off, and it's going to be $10. Oh, yeah, really? So you walk in, you go find Reminiscences of a Stock Operator, and the cover price is $40. But, hey, it's 50% off. They're the same price. That's pretty much what happens. But which store would you go into if you're looking at 2 storefronts? One that just has a book sitting there, says $20, or one that says half off all books? You're going to go into the one that's discounted. People like cheap stuff. People are afraid to buy Amazon. People are afraid to buy Google or Berkshire Hathaway. But boy, you tell you what, you get them a penny stock that's trading at $1, and they'll sell their mother to get money to buy those shares. It's ridiculous how people jump on low prices. So it's a psychological thing where they're utilizing a low price as an appeal. And of course, now we've got the Robinhood effect. I guarantee you that on Robinhood, because of the announcement, people are buying Apple. I'll bet. I haven't even looked. Let me bring it up here, just because I'm pretty sure that it would have happened today. I'll bring it up here so you guys can see it too. Let's go to Robin Track and see what we got cooking. Hold on. Take just a second to load up here. All right, so there's your Robin Track. Oh, by the way, gonna give myself a pat on the back for this one. You guys remember when I was bad-mouthing Nikola and telling the viewers that if you bought this one, you guys are out of your mind, you're an idiot? You guys remember that? I was a little bit rough. It was up at like $65, and I said, guys, this thing's going to 30. I will bet you a bottle of Blanton's it's going to 30. Did you happen to catch what happened to let's see, NKLA. Let me bring the chart up for you guys. I love this. Look at the chart of this one. What goes up must go down. This was a pump and dump if I've ever seen one. That's the insiders selling their shares, which is exactly what we talked about in the show. I'm hoping some of you remember so I don't sound like I'm just pumping myself up for no reason. But yeah, I'm glad none of you took the bet, because you would have owed me a bottle of Blanton's on this one. That's a $70 bottle of whiskey. It's at $30 right now. Thank you. All right. What were we... Now, see, I'm drifting. What were we talking about? Damn it. Oh, crap. Where were we? We were, you guys had me on track, and I just totally got sidetracked. Oh, Apple. Apple on Robinhood. That's what we were talking about. Sorry about that. I got a little excited there when I saw that one. Let's see. Let's go to the Robin track. So let me go type into, let's go leaderboard. And this will tell you what the most active ones have been in the last 24 hours. And given the fact that Apple announced 24 hours ago that they're doing a split, my guess is the popularity changes. Did we talk about predictable, guys? It's the #1 most added security at Robinhood in the last 24 hours. It's just, come on, man. Come on. It's so predictable to follow these sheep out there. I mean, these are people who, for the most part, don't have a clue. And the sad thing is these Robinhood traders are getting like 200-300% returns in their portfolio because they're buying bankrupt companies. Just wait for the correction. These Robinhood traders will be broke as a joke. I cannot wait. To see them just crying because I lost all my money. Yeah, because you don't know what you're doing. You're just buying everything for stupid reasons. Sorry. Just get me all fired up out here today. Conveniently enough, Apple, probably the most overbought security in the market right now, is the #1 most added. Conveniently, in 24 hours, Kodak is the most widely dispersed, meaning that's the most that people have sold is of Kodak. Oh, really? Let's see. What's the definition of holding the bag? These are, this is a weekly. Let's go to .d. Yeah, they sold yesterday. That's after it went all the way up to $60 and is now trading at $21.85. Yeah, smart move there, guys. Bravo. Well done, Robinhood. Well done. All right. Cool. Oh, there you go. That's my take on Apple is, look, I wouldn't touch it. I wouldn't mess with it right now. I think, if anything, I'd be thinking about buying some puts on Apple simply because I think it's way overbought. Now, the challenge is here, you don't have anything up as a supply level. There's nothing up there that would tell you that there's a high probability turning point. It's speculation at this point. But this is a gap, a huge gap, one of the biggest gaps that Amazon's had in years, a giant gap, ripping to the upside. This tells me novices are just pouring money in. You've got Split, you got Robinhood, you got earnings. It's ripe for a sell-off. I wish, technically I can trade options, so I could go buy some put options. We'll see what happens next week on this, but I'll definitely be following this one. Merlin, do you think the retail guy Robinhood can move the market compared to institutions? Sure. Absolutely. Anybody can move a market. Remember, it depends on how thinly traded those markets are too. So I think right now, you are in a situation where you're actually seeing institutions know how to manipulate these Robinhood traders. So if there's a major announcement coming, it would not surprise me to see institutions push it up. Because if I'm Wall Street right now, I know we have a new dynamic. Something has changed over the past couple of years, and that is things like Robinhood, where you have a centralized location of novices, right? It'd be great if they offered some good education there, but they don't. They don't even tell people how to look at their statements, albeit that kid killed himself because he didn't understand his trading statement. So to me, they're doing their customers a disservice. They're allowing them to buy, one share at a time with no fees. Great, good. Do what you guys want to do. The problem is these guys don't know what they're doing. So if I know that as an institution, I could pump out any news I want into the market, knowing that there's this 1 million+ people who are going to literally just hit the buy button because it was mentioned on the news. That's it. So I can front run that news. All right, I might go out there and buy myself some Apple over the next couple weeks, and I'll make an announcement. I'm going to upgrade Apple, or I've got connections knowing that Apple is going to make this split. The split didn't just get announced instantly, right? This was something that they don't walk into the boardroom on Thursday and say, well, guys, you want to do a split tomorrow? You guys want to do a split in August? Split in August, we good? Okay, let's do it. Done. It has been talked about and talked about and talked about, and it wouldn't surprise me to see a lot of this move up has been because institutions and directors and executives were buying Apple shares knowing that a split was coming. These announcements don't just happen in the snap of a fingers like you walk into the produce department and grab an avocado, guys. It's taking a long time for it to make an announcement of a split. Puppies eat anything. I like that. That's a great analogy there. Yep. Now, the other deal here, when Patrick says Merlin can move a market, I have moved markets. It's funny. I actually have a picture of it somewhere, and it was only 1,000 shares. I was in Dubai teaching a class. It was awesome. I was in my room. I was bored. It's 115 degrees in Dubai. I just wanted to stay in the AC. And I actually bought this company. I don't even know what it is anymore. It was so long ago. But I bought 1,000 shares. And I think when I bought it, I bought in like 200, then another 200. And I found myself up a full $1 on 1,000 shares. I think it was actually up more than that. I have to find the picture for you and I'll share it so you know I'm not making this up. It rallied up. And I was up big on this thing. I was a couple $1,000s on 1,000 shares, so it was a good gain. And then I'm like, I'm going to get out. And I saw that there wasn't a lot of liquidity on the bid, not a lot of buyers lining up at the bid to buy shares. So I hit a market buy button, or market sell button. I dropped price 50 cents. My own order of 1,000 shares dropped the market 50 cents in that share. So if something's illiquid, and this is one of the areas a level 2 screen can assist you, is seeing who's lining up to buy shares and how quickly they're willing to buy shares. What do I mean by that? If we look at a normal market of any stock, it's going to be a 1 penny spread, meaning the difference between the bid and the ask is a penny. That's what they should be. If it's 3, 4, 5 cents, that's starting to get a little bit wide. But normally, because of a liquid, competitively traded stock, it should be about 1 penny. But there's also price levels on each side of that. So you've got your buyers and you've got your sellers. Your buyers over here are lined up by price increments. So let's say the current price is $40. Well, there's somebody probably trying to buy it at 40, and then somebody at $39.99, then $39.98, $39.97. There are 1 penny differences between levels. What happened on that stock that day was, it wasn't, the first guy was bidding to buy it at $40, but then the next level down was $39.85, a 15-cent change. So that the level structure told me how dangerous that specific security was and how quickly it would move to the south side. So something you got to think about. Anybody can move a market. It is actually fairly easy, especially if it's an illiquid market. Are you going to go out there with your 1,000 shares or even 5,000 shares and move Microsoft? Not a chance. Not a chance. Now, if you went right now, after our session, and did a 5,000 share market sell, we can't do market, but a sell order for Microsoft, you probably move that market because it's illiquid in the after hour sessions. Anyway, that's one of the reasons we look for criteria during regular market hours, so we stay in trades that or in securities that aren't that illiquid. Okay, we went off topic a lot on that one. What do I got? I got a couple more charts here. Great one from Tevin. Tevin says, can you give some analysis on the dollar index? Okay, this is a good one because we've been talking about this. I said earlier in the week that there was a demand zone on the dollar index, the Dixie. I'm hoping some of you guys made trades off that. And that should have equated, well, let's look at a couple things here. First off, here is the dollar demise right now. It has been a really ugly move for the dollar going all the way back into March, right? And of course, we know this is because of stimulus and printing trillions of dollars. It's of course going to have a negative impact on the equity or on the dollar because it's just you're increasing supply. There's more of it out there. It's going to get cheaper. That in turn should have another effect. There should be a Rorschach type picture here. What I mean by Rorschach is usually the inverse, right? So you see this, and then there's the exact opposite going. That should be the S&P should look like this, but upside down. Meaning the S&P should be ripping straight up based off of this. Now let me see if I can, bear with me a second as I tweak some charts here. I'm going to put the dollar index at the bottom, and I will put the S&P at the top, just to give you an idea of what the differences are and how this is structured. Because to me, they should be inverse relationships. And don't worry, that's not the S&P yet. I'm getting there. Okay, so I'll put the SPY on this one, SPY. Now you notice that there is a fairly tight correlation back here, and then all of a sudden it fell apart in February because of what went on with COVID. They are inversely related, but right now the dollar is accelerating to the south side, really picking up steam. If this was truly an instrument that has a relationship to the other, you would see the S&P ripping to all-time highs. It would be way higher than it is. So to me, that actually implies a bit of weakness in the overall markets. It basically says one of these has gotten out of the norm. Either the equity markets are falling behind and are due for a monster rip to the upside, or this dollar index is oversold and is now due for a rip back to its mean, meaning it's going to come back up to 96 or something like that. Conveniently, when we look at the levels on here, let's put it onto a weekly because that's where we saw them. I think we saw it on Monday or Tuesday. We were pointing this out. There was this area right back here in April of 2018. Where you saw this small little hesitation, then boom, a rip out. That was the exact point. We'd mapped that one out. It ripped out of that one. It was just a beautiful move on it today. We'll see if that continues. And I said if we get below this level, we're shooting back towards that 90 mark. We might actually see some nice move up here in the dollar. To me, I just believe it's overextended. Either that or the market's going to rip to the upside and the dollar will keep on falling. So there's your thoughts, Tevin, on the dollar index. This is great because it does give you a lot of opportunities in other currencies. Obviously this has a huge weighting to the euro. So if you go to the euro USD, All right, this has been one of the main reasons why this euro has been doing so well. The dollar is just showing incredible weakness. Now, of note here for this euro on the weekly time frame, you see this significant move, but let me go in and just map up the high here. You're almost at that same point, right? This isn't, to me, as great of a supply zone as it was a demand zone on the dollar, but this is, there are mirror images of each other most of the time, because I believe over 50% of the dollar index is the euro itself. So you had the euro come ripping right into supply. It might be due for a pullback to the south side, and I think your dollar index might be a pullback to the north side. And see them popped up. Yeah, Don says equities the upside. Don says that because he's long. He's long a bunch of equities, and it could be. It could very well see this thing rip to the upside. But I think we'd all agree one of them has to give. When you look at those two pictures here, I'll bring it back up just for discussion purposes. You look at the Dixie, the dollar index. They should be. Oops, they're not lined up. This is a weekly. Now they're lined up. One of these has to give. Either the dollar is oversold or the equity markets haven't rallied up enough. That's the tricky one, right? You really and I don't know which way it's going to break. Personally, the longer that the equity markets hesitates, it tells me that the equity markets are the ones that's broken and that might sell off. And we've been sideways in the equity markets for 10 sessions. Look at the SPY. Now you've been stuck in a fairly tight range. For 2 weeks we've been stuck between 319 and 327 on the S&P SPY. So anyway, that's the important part for me right now is watching this one. I think especially if you are a spread trader on options, you got great opportunities here trading within that channel. You also could be doing just waiting for breakout trades if you are that type of trader as well. All right, let me take any last minute questions roll through here. I see a ton. I want a ton of questions. I want to get time of that. Let me get to. Mark says it seems like the FTC would prevent Robinhood from having stupid users. There's a great comedian out there. Great is subjective, I know. I find him very entertaining, and he's got a stand-up routine. His name is Ron White, and he's like, my wife, she's got fake eyelashes. She's got fake boobs. She's got knee replacements. She's got hair extensions, and you can fix all that stuff. But you know what you can't fix? You can't fix stupid. And I love, sorry, my delivery's wrong for those of you who know Ron White, although I usually should have a glass of whiskey right here. Yeah, you can't fix it. You can't pass a law against people being stupid. And it's not, maybe I'm being a little bit harsh here. It's just uneducated. And I mentioned this earlier on in the week. If you want to survive at this for a long period of time, you better be educated on what the markets do. Robinhood traders are simply buying what the media is telling them to buy right now. We saw how that worked in 2000 as well when the media said, buy everything because we're going to keep on going higher, and the markets crashed. It's typical to have that happen. And my frustration is that I've been doing this well over 20 years. My frustration is I've got people who've been in the markets for 3 months now have more followers on an Instagram channel because they're now experts in trading. It's like, get out of here. You have no experience. It's like saying you rode a bicycle for 3 months and now all of a sudden you're going to be in a BMX tournament, doing half pipe on your BMX bike. Not after a couple months, you're not. No way. So, part of me loves the fact that they're bragging so much. The other part is, I'm a real trader and I've got real experiences, and a lot of it I want to share, yet I don't have anywhere near the subscribers or followers that some of these little 12-year-old kids on Instagram do. It drives me nuts. All right. Let's see. What do we got? All right, let me show you real quick your economic calendar and earnings calendar for Monday, just so we can get that out of the way. I'm going to be on an hour show again. Here's what's cooking for the August 8th or August 3rd, Monday. There are double this announcements. I only had a space for a few here, and I wanted to kind of pick the key ones. There's something I did a chart of the week a couple weeks back talking about consumer consumption versus income versus spending. And the reason why this is important, I think you all understand, if you are spending more than you are taking in after taxes, then you are going to go into debt and you're going to go bankrupt. Well, Americans are great at that. So take a peek at our personal income and expense numbers here. I'll turn them on. Oh, I'm sorry. You know what? Wait, that was today. See, I'm backwards. That's what I want to show you. This is today. Okay. Look at the personal income and spending. Personal income dropped by 1.1%, yet spending increased by 5.6%. This is that separation, that discrepancy where all of a sudden, if this trend continues, we're going to put ourselves right back into a major debt hole. And of course, debt is a terrible thing if it's bad debt, and most of this debt is probably bad debt. So I didn't like this number. This is what came out today. Monday is really all manufacturing numbers, guys. Here is what's happening for Monday. You see you've got manufacturing PMI for U.S. You have construction spending. I put the main ones that will impact our equity markets in red. Notice that those are all during regular market hours. That's a bit different here, all right? The 15 minutes in, you get final manufacturing PMI, and 30 minutes in, you get 3 other announcements. So be careful on Monday because that is right as markets generally turn anyway. It's 30 minutes into the trading session. It could be further exacerbated by these 3 announcements. Now, earnings, we had the big stuff this week. All the major, unbelievable names reported this week. We'll see what happens next week as we have... I'll call them the second tier of earnings and some retailers. I think the retailer numbers are really going to be what spooked the market. Clorox is reporting on Monday. You also have Marathon Petroleum, Take-Two Interactive, Mosaic. Those are some of the major names reporting on Monday. All right. We are already all debt, Adam said. Not all of us. Hey, man, my mission has been to help my friends get out of debt, and it's an easy thing to fix. It really, really is easy to get out of debt. Wow, motorcycle riding down my street. It's easy to get out of debt if you just simply map out a plan on how to achieve it. Just like I would say map out a trade. You certainly want to map out your trade so you know how to achieve your goal on that trade and know what you did wrong in the process, if you did do anything wrong. Same thing with personal finance as well. All right, let's see. You need to buy a Lambo and get more followers. Joseph, you will never see me. You could buy me a Lambo and I would probably sell it and go buy myself a full-size double cab Toyota 4x4 Tundra with a camper shell for my dog. I'm that type of guy. I know, Sheena. What did happen to all the ladies? They were here earlier. Here, you got to bring them, Sheena. Bring the girls. You know what? Actually, for Sheena, I wanted to, because you're a realtor. I talked to Diana Hill today, who is one of my real estate expert gurus. I love Diana Hill. I was gonna try to bring her on the program. Maybe we'll see if we can get that. There was some earlier, Sheena. All right. I think that's it with regards to questions and comments. That's that. I'm gonna stop. There you go. Thomasina's there. We got 2. All right, everybody. That's gonna do it for me. I'm gonna try my best to get you a chart of the week tomorrow. I'm probably gonna have a dinner party and maybe go out and try to have some fun tonight. So who knows when I will get to that? But it's supposed to be released on Saturday morning at 10 a.m. So we'll see if I can get to that one today. Also, Tilly's market analysis or market outlook will be done on Sunday, so you can check back to the YouTube channel for that one. If you like today's show, do me a favor, give me a thumbs up out there. If you have comments, questions, put them down below the video. We'll get to all those questions on Monday's show. And maybe we're going to have Don Fran joining us. He's in the chat out here today. You guys might check out his channel as well. He'll be on the program on Monday. We'll just talk about equity markets and get his perspective on trading, which is interesting because Don is decisively bullish right now. And, of course, you guys know me. I'm a little bit bearish, but would love to see the logic and justification or reasons why he's bullish out there, which I think is great to see different perspectives on why markets are going one way from one individual and why another thinks they're going the opposite. Of course, Don already has a huge head start because if he follows the show at all, he knows that I took a massive loss shorting the S&P, but it's okay. I'm okay with it. It was predefined risk to start with, but we'll catch up. All right, everybody, thank you so much. Hopefully you guys have a fantastic weekend out there. Be safe. Wear your masks. I know I got these little cheapo ones. Wear your masks. Have a fantastic weekend, and I will see everybody on Monday. Take care.